And it's the midweek edition of Business Morning, live on Channels Television. Great to have you join us. Good morning, good evening, wherever in the world you're watching from. I'm Ladi Williams. Let's take a look at the markets first. Now we see oil prices drop today in Asian trading as U.S. inventory data showed build-ups in crude oil and refined products amid rising fears of a global economic slowdown. Brent crude futures dropped 68 cents to $98.81 a barrel in early trade, while U.S. West Texas Intermediate crude declined 72 cents at $95.12, also the lowest in about 3 months. Seeing oil prices now below $100 at this point, investors have sold oil positions on worries that aggressive interest rate hikes could stem inflation, would spur an economic downturn that will hit oil demand. Prices fell by more than 7% in the prior session amid the volatile trading. Renewed COVID-19 travel curbs in China also weighed on the market. Multiple cities in the world's second biggest economy have adopted fresh restrictions, from business shutdowns to broader lockdowns, in an effort to rein in new infections from a highly infectious subvariant of the virus. Nigeria's oil production, including condensates, dropped to 1.4 million barrels per day in the first half of this year. That's according to the Nigerian Upstream Petroleum Regulatory Commission, NUPRC. In its latest oil production status report, the NUPRC says the figure is a 14.3% year-on-year decline from the 1.6 million barrels per day level recorded same period last year, and about 400,000 barrels per day shortfall against the 1.88 barrels output benchmark in the 2022 budget. Meanwhile, energy analysts attribute the underperformance to increased pipeline vandalism, oil theft, and illegal refining in the Niger Delta. And Africa's aviation sector could post a net loss of $0.7 billion this year, up from $1.1 billion recorded in 2021 due to slow COVID-19 vaccination rates. This finding was made known in a tweet by the International Air Transport Association. In a short video on the social media page, the 290-member global airline body said lower vaccination rates have slowed Africa's air travel recovery, but hints that some catching up could happen this year. Meanwhile, a report released by the association last week mentions that Africa's aviation sector recorded a 134.9% rise in the May revenue passenger traffic, while total international air traffic rose more than 83% as a number of routes exceeded pre-COVID-19 levels. All right, after the break, we'll drill down on the FAO report showing world food commodity prices declined slightly in June. We'll be having this conversation with Tunde Banjoko, MD, BO Farms. That's in a moment. Do stay with us. All right, now to our first conversation. Report from the Food and Agriculture Organization of the United Nations shows the barometer for world food commodity prices declined slightly in June. For the third consecutive month, the drop in June reflected declines in international prices of vegetable oils, cereals, and sugar, while dairy and meat prices increased. Another report cites that from the United Nations Food and FAO published in collaboration with the Federal Ministry of Agriculture and Rural Development warns that about 19.4 million people in Nigeria could face food insecurity between June and August 2022. Well, join us now to unpack all of this. We have Tunde Banjoko, MD, BO Farms. Join us right here in the studio. Great to have you.
Thank you, Laddie. Good morning.
Good morning. So, first of all, let's look at this drop in prices for some of these international commodities there.
Yeah.
It's a consecutive month now. Would we say we're out of the woods, you know, when it comes to most of these prices for because we've seen them skyrocket, you know, a couple of months now?
Yeah, no, we are not out of the wood. We are still, what we are experiencing at the moment, or what the report is just extraying is, I mean, what has been happening for the last 3 months. So, and it's really due to harvest, seasonal harvest. So it's normal. And what we should be looking at is the price 2021 and 2022. When we look at some of these prices, I mean, some of the products that have been quoted, cereal, oil, and sugar, we'll look at those three. Let's look at those three as an example. For example, cereal is being about from maybe last 3 months. And then when you compare this year, 2022 and 2021, there's been about, I'm talking about June 2020 to June 2021, there's been about almost close to 27% increase from what we have last year. And just the slight decrease is because of what countries like Argentina and Brazil pushed into the market for cereal, and with the hope that US is also going to push more into the market. So that's for cereal. For oil palm, for example, let's use Nigeria as an example. For the last 3 months, our harvest in Nigeria for oil is between February and May. So that period, the price will always dip. And the same thing with other producing nations, like Indonesia is being projected to produce more and push into the market this period. Yeah, for Ukraine, for example, this period, their wheat should have been in the market. Some are also in the market. Some other Eastern Europe countries are pushing into the market. So it's really a seasonal thing. It's just due to harvest, increased production, and speculation of more products being pushed into the market.
Because
so
the war is still on.
The war is still on. So that's just the reason. We are not out because, like I said, you look at for cereal, 27% higher than last 2021 June. You look at for wheat, we are 48% higher than what we were doing last year June. You look for oil, the same thing. Sugar, there's been a little, the demand has been a bit reduced. That's why the price seems to be on that rate. So for it, to the question, we are not out. We are just enjoying
We might not see the trend actually continue.
The trend might not continue maybe in the next 2-3 months. Let's assume this for this quarter. For next quarter, it might not be the same.
Might not be the same. All right, we'll keep tracking that. But the report also from the FAO showing that about 19.4 million people in Nigeria could face food insecurity between now and August. That's really
a high number.
In it.
We're in it already.
At this point.
So, that's a scary number, that 19.4 million people. But, the way I always track things is we didn't just get here. We look at what was the number last year. We were told 12.8 million people are suffering severe hunger in Nigeria. What did we do? Did we do anything? By May 2022, the number had increased to 14.4 million people, with about 368,000, even in IDPs, suffering the same hunger. So they are in the camp, but they are still hungry. And then now they are telling us that between June and August, the number will move from 14.4 million to 19.4 million. Additional 5 million going into that bucket. That's a huge number. And what interests me about the report is you look at the states, 21 states in Nigeria, including Lagos and FCT. So I asked myself, so are we also going to go hungry in Lagos? So if they are telling us even Lagos and FCT, and amazingly, of course, most of the states in the north are going to go into that bucket as well. So I think it's a scary number. And also seeing that the Federal Ministry of Agriculture is also working with them. So the issue, before now what we used to see is that, the number is not true. The number is not true. They are being falsified. And then when you also look at, backtrack to 2015, you look at 2015, what was the data? We were told, okay, 9% of the population. 2016, we moved to 12% of the population. 2017, we moved to 14%. By 2018 to 2020, we moved to about 21% being projected. And they are even telling us it might, by 2020 to 2022 forecast, we might be having about 3% of our population in serious...
That's a big number.
That's a big number.
And, with what we're seeing happen in most of these other countries, like Sri Lanka, for instance, now it's not looking good because it's the same shortage.
It's not.
Most of these countries.
It's not. And when you look at the full FAO report, it's saying 43 countries, 33 in Africa, 10 in Asia, and then some others. So it's really a global thing, but
what can we do here to reverse this?
To reverse this is we need to now start getting serious as a nation. We need to start getting serious. Let me use, some of the recent issues that we are having. of wheat not being supplied into the market. Countries like Ivory Coast, I was reading some reports yesterday, Ivory Coast started using cassava flour for baking of their bread. This was first introduced into by President Obasanjo. We didn't embrace it. President Jonathan also introduced that let's start using cassava flour to substitute part of our wheat so that we can reduce dependence on wheat. Nigerians said, no, the taste of the bread and the cookies are not what we are used to. We rejected them. And now for a country that prides itself as the highest producers of cassava, 59.4 metric ton thereabouts, so meaning we can actually produce enough, even though what we are producing is not enough, but we can jack it up to an extent whereby we can substitute with about 10-20% and reduce dependence on wheat. For example, Nigeria, we import over 6 million tons of wheat yearly. We just increased production from 55,000 to 99,000. Last year, we were told we spent 1.3 trillion on wheat alone. In 2020, we did about 797 billion on wheat alone.
Taking out all of that precious dollars.
Taking all of that outside of the country. But what is countries like Sudan doing? Sudan now started cultivating their own wheat. Now they cultivated 65,000 tons on about 317 hectares. And in 2 seasons, they were able to get 1.1 million tons. So if a country like Sudan can do that, and we are still talking about 99,000 tons. And then, but CBN, I think, is coming up with a program for 2022 to cultivate on 100,000 hectares, increase our production to 400,000 hectares. If CBN is able to achieve that, I think they are committing about 42 billion into that. If they're able to achieve that, I think that will start. So really to the question, we need to start. You know, when we say buy Nigeria, grow Nigeria, you know, it's a slogan for most of us. But now we need to tame our tongue. We need to tame our tongue, start appreciating and embracing what we have.
Right. What's in a taste? All right. So talking about interventions, now we see the EU looking at investing about 1.3 billion euros in Nigeria's agricultural sector. Quite a good amount
number,
there. But where should they be concentrating spending, you know, of this money at this point?
There are so many areas they can. I think I will advocate for those commodities that take bulk of our forex in the agric industry. For example, you look at why we buying what we are buying at the rate we are buying these days. Some of them are so simple. We just give an example of wheat. Now, a loaf of bread that we used to buy 400-500, some are going as high as 700-800 just because of wheat. So now farmers are ready to cultivate. So if we can empower wheat farmers, Borno State used to be our highest producers. Now, because of insecurity, they are not doing as much. Jigawa is our main wheat market now. So we should start looking at those commodities driving our numbers. Secondly is, why is egg on the high side? Let's give a little number. We used to buy a crate of egg in Nigeria before 700. Even about a year ago, 700, 800, a crate of egg. But now it's between maybe 2,000, 2,400, depending on where you are buying. Why is that high? Because of maize and soya. That is primarily the product used in feeding the birds. So why are we struggling with that? Because there's no feed. So can we have irrigated farms? So they should be looking at irrigating farms that will give us maize all year round. Now everybody's eating maize, buying maize because it's in season. I'm sure when the rain stops, you don't get to buy. And you know, I wanted to buy somewhere in Via on Saturday, 300 per one, you know, because I irrigate my farms and all that. You know, you have to ask yourself, 300 per one because she irrigated our farm. So what am I saying is, EU and other intervention programs should start looking at those specific commodities driving the export. You know, I looked at the 2021, the import bill of Nigeria. Wheat was second to petrol. Wheat was second. So meaning is not a small number going into that space. So wheat, maize, soya, irrigation should be funded and large-scale farming.
Right.
I think if we're able to do that, and you see a lot of farmers now, even those that are into egg production, that are into poultry are going into broilers. Some of them will tell you, I can't cope with these numbers anymore. I'm selling the egg, the middlemen are even making more profit than I am making.
Right.
So rather let me just breed these chickens for 6 weeks, sell and make my little margin, turn it around. And so we should look at how can we help these people in this sector as well. So the feed has to go down. And of course, if they are able to give us one thing farmers are always asking for, single-digit loan, long term.
Single-digit loan. Very important. And at a time when, you know, we're seeing central bankers hike rates, you know, trying to tame inflation. So that'll be quite a tough one to get
but it's not impossible. It's not impossible. So it's just for us to get our priorities right. Like I said, if, for example, we look at our 2022 budget, 290 billion, and we are importing wheat alone, 1.3 trillion, this, and you look at the numbers. So we are importing, the dollar is going high. So why not let's just put that same money in those things driving the numbers?
Exactly.
So
it makes sense.
It makes sense. Right. So now people are importing jollof rice into Nigeria. People are importing stew. People are importing.
Rice. And Nigerian jollof is supposed to be the best.
You know, we were told our jollof.
So
the other day I also saw pomo. Sorry for if that's not allowed on this.
No, please.
Pomo.
Right.
What our food, bokoto, being killed from a country in Asia, roasted, packed into stew, imported into our country.
That makes no sense.
You are when we have enough ranch that we can invest in, like, in Ekiti, I've seen one very lovely one. Maybe I'm not to mention their name. Very lovely ranch in Nigeria. People are doing well. Why are we not encouraging them? Why are our cows still going from Kaduna to Lagos before they can feed and then all that? So let's invest in all these
ranching,
things.
That's another conversation.
Another area,
Yeah, that one needs to look into. Thank you so much.
To add to that, you look at, in 2021, we imported milk alone from Ukraine with about close to 800 million. Milk.
Wow.
When we have cows everywhere.
Thank you so much, Mr. Tunde Bajoko, MDBO Farms. It was great having a conversation with you. We keep tracking, that sector because we all need to eat.
We all need to eat.
Thank you so much.
Thank you so much, Laddie.
All right, now we'll take a moment now. All right, now let's get a sense of activities on the AFEX Commodities Exchange for the week ended July 11th. We have join us right now, Femi Kende, analyst, structuring and origination at AFEX. Join us from our Abuja studio. Great to have you, Femi.
I'm happy to be here, Laddie.
Yeah, so let's have a rundown of market activities on the exchange.
So for the week, we actually saw a significant decline in the level of activities on the exchange in terms of the total turnover, the volume traded, and the number of deals. The total turnover fell by about 91% as contracts valued at 660 million were executed for the week. The volume traded declined by 84% week on week as 1.9 million contracts was executed for the week, while the number of deals declined by 47% week on week as 308 deals were executed this week. For the financial indexes on the exchange, we saw the AFEX Commodity Index increase marginally by about 0.50% week on week, and the AFEX Export Index increasing marginally, significantly by about 2.72% to close the week at 194 basis points. In terms of the volume traded across commodities, we saw maize accounting for a significant bulk of the volume traded, seconded by paddy rice, cocoa, soybean, sorghum, and cashew. In terms of commodities prices, cocoa was the top gainer for the week, increasing by about 22% to close the week at 1,198 naira per contract. Paddy rice closed the week with a 23% increase week on week to close the week at 279 naira per contract. Maize closed the week with a 2.64% decline, closing the week at 219 naira per contract. All other prices on the exchange remained the same. For more information about our reports, you could visit our website, which is africanexchange.com, or you could follow us on our social media handles, which are AFEX at Nigeria. Afex Nigeria or Comex by Afex.
See Mays getting all that volume attention on the exchange. All right, thank you so much, Femi Kane, the analyst structuring origination at Afex. Thank you. All right, now let's take the conversation further, ensuring that the cocoa smallholder farmers were the sole owners and genesis of the Nigeria cocoa value chain. And most times, those who go through various challenges get adequate resources, certification needed to boost their cocoa production. That's what we're focusing today. We have Kamaldeen Raji, MD, Afex, AFTL, join us. Great to have you, Kamaldeen. Hello, Kamaldeen, can you hear me?
Yeah. Barka de Salah to us.
Barka de Salah to you too. Barka de Salah. So, having been in communication with these smallholder farmers firsthand, what are the main challenges faced by cocoa farmers, and what do you think is the way forward to helping them?
Yeah, thank you very much, Ladi. From inception, as a country, we could recollect very vividly that our major forex earnings used to be from agriculture, and cocoa especially, during the early days of Nigeria. And from time, the problems has always been aging crops or aging trees, soil management, disease, pests, and another thing is the pricing. That is pricing of cocoa. Cocoa is localized, and the production, primary production, is centered around West Africa countries, and but the international pricing is still out of Africa, and we rely solely on this. So what we are doing as a company is this. Recently, we launched a 1 million cocoa seedling, cocoa tree seedling, and this was disbursed to cocoa farmers across the crop producing areas in Nigeria. This is just to help rejuvenate the aging cocoa trees, and to ensure that farmers are getting a value for all their effort that they are putting in. These cocoa trees that were disbursed to farmers are early maturity cocoa that can do fast in less than 2 years, and farmers can start earning something. This is in phases, because if you need to have to take everything out at once, that simply means that farmers will be out of getting any income. Cocoa farmers will be out of getting any incomes in the next 18 to 20 months. But what we did is doing it in phases, and at the same time, we are working with this farmer to get them the right type of education so that they can apply the right form of extension and agronomy into whatever they produce on soil management and addressing the needs of the cocoa plantation.
Quite interesting. And Nigeria is known to export more than 90% of its cocoa as cocoa bean. Do you think it's best? Obviously, it's not the best value for the commodity, because we could actually make more actually exporting chocolate. What can we do better here?
Yeah, that's so correct. But we just need to drive back and say, okay, how many chocolate producing companies do we have in Nigeria? What's the volume of cocoa we produce in Nigeria? How do we put a concerted effort to this to make sure that whatever is being produced can get a value add locally in Nigeria? It will be surprising to note that not less than 95% of those farmers that work day in, day out in producing cocoa bean have never seen chocolate, or talk less of eating or having a bite on chocolate. And the value for chocolate is far higher than whatever effort they are putting for in producing cocoa. It is not the best approach, because whatever you are exporting raw out of any nation doesn't have any value to it, because raw production is just being you producing and at the mercy of those that had little or small value onto it, and they'll sell at a premium. But what we are doing now is this. We run our farmer through certification, which can earn them more income. And this sustainability certification is targeted at farmers, ensuring that they have the best agronomic practices. They ensure that there is zero child labor and some other things, applying the right type of fungicide, herbicide, soil management, disease and others from the beginning. It's a bottom-top approach. that can only take us out of this. That is, we ensure that these farmers that are producing cocoa get the right education, get the right type of agronomy, get the right type of seedlings, and ensuring that they do the right application at the right time. So during the harvest period, they get a premium for whatever they produce, regardless of whatever price is being celebrated anywhere in the world. For the fact that they are going through sustainability, going through some certification, they get a premium, and this will definitely encourage the farmers to go back to farms and be able to produce more. What we did recently was to first make sure that we mapped our farmers and their farmland, their location, check their families and background, so that we'll be able to provide a solution to whatever need they are looking at. And at the same time, we all know that the issue of deforestation and others, not allowing farmers to go into the reserve area, it cannot be attained or achieved by only one company. And that's why we are collaborating with some partners to ensuring that farmers get the right type of education, do the right thing at the right time, and be able to access the right type of market. So in effect, we've been able to provide like 3 platforms for farmers where we can ensure that they get the right type of market intelligence and be able to sell at a premium, get access to market at the right time, get access to storage at a very cheap price, and being able to get the right type of education, access to financial services at the right time, so that they can go back to farm. They are not thinking of leaving their villages, their farmland, to look for any job anywhere. And deliberately, we ensure that we give them the right type of orientation to ensure that their own children are not just sitting back in their houses or working on out-of-age type of tasks and activities on the farm. We ensure that, that their children are in school at the right time, and ensuring that they get the right type
quite a lot FX is quite a lot FX is doing there. But you know, we've been into production of cocoa for a while now with very low need for certification. Tell us more, you know, about these certifications and the value it brings to you know, the activities.
So thank you, Ladi, again. The issue of certification is a deliberate and concerted effort that we are pushing so that our farmers will always have reasons to be able to continue what their preoccupation is and what they have been living their life on from inception. And that is to say, we take the farmers from the norm of just tilling the land and wait and see, oh, this is not doing, I notice a green, I notice an epiphyte or neophyte on my crop, and I don't know the next best thing. So what we do on this lane is that we met with farmers, put them in cooperatives, and ensuring that this cooperative understand the dynamics of being in a group and meet regularly. One, the reason for the meeting is for them to share a lot of intelligence about the market, and at the same time to have 1 or 2 knowledge about what is happening in the international market and both at the local market. And this is done because we all know that there's a premium out there for any farmer that is certified for whatever they are producing. And we move them from that level, being a cooperative, ensuring the right type of agronomy, applying the right type of herbicide, insecticide, or fungicide on the farm that are certified by international partners or international processors who are in need of this type of cocoa bean. And this would definitely drive them to closer to these people and them getting a value for what they do. And at the same time, what we do now is to ensure that there's a traceability line to whatever anybody is taking, coming from FX, especially on the cocoa side and some other edibles. And this is to say that you getting a bag of cocoa from FX, you'll be able to, with the QR code attached on the bag, you'll be able to check from which warehouse is aggregating this, which farmer is putting 1 or 2 effort into producing it, and ensuring that the farmers are getting the right type of pricing. And this right type of pricing will definitely go a long way. Because according to what survey, what farmers got at the end of the day, especially for cocoa farmers, is still less than 60% of the cost of their effort in producing this a bag. So by this, with this effort of traceability and sustainability with certification, farmers are getting more income, and at least they'll be able to move up the ladder from the bottom of the pyramid up a bit to be able to live a better life. Economic-wise, they are better, but the approach is bottom-top. We start with the farmers, get them the right type of education, give them the right type of seedlings that can move up and germinate very faster, that can grow faster and can start yielding. And, you know, the aging crops are systemically being taken off the farm and being replaced by new crops, and that will definitely increase their yield. So when the yield is increased, there's a definite result that is coming out. That is, they get a better value for all the effort. So you reduce the number of time you spend on the farm in trying to mitigate against pests and climate change, because the seed and crops are new. And at the same time, the yield is far better, which is better for them too. And at the end of the day, they get the value for it. What we do, and add up to this, is ensuring that there is a very good quality in-house monitoring system. Okay. That we have field extension, who are versatile with the nature, with the agric nature and economy in our local producing areas, and ensuring that they meet with farmers, they mentor them, and ensure they mentor them and continue to engage them to get a better result.
Right, quite a lot you guys are doing over there. It'd be great to see, you know, value added to our cocoa at some point. Thank you so much, Kamaldeen Raji, MD, AFEX, AFTL. It was great having you on the program. Well, take a moment now.
Thank you so much, Ladi. We are not relenting. We are trying to strike a balance between what we produce and what we consume. And all right, we are not relenting.
Great. Thank you so much. All right, we'll take a moment now. All right, now let's head on to the markets. We have Willie Wong there with the details. Well, Will, first day of trading today. Wonder how it's going to go.
Good morning, Ladi. We're just looking at the market direction and wondering how investors are going to trade today, you know, following the 2 days holiday that we had, Monday and Tuesday. Investors are still probably, you know, getting themselves out of bed and just wondering, where am I going to put my money and where is it going to go? But we'll see how that goes today at the close of business. Yes. So, but, you know, naturally, investors are probably going to put money where they're going to get most returns. Now, the bond markets, you know, last week remained very bearish, and investors sold off positions across the curve in anticipation of uptrend in bond market. We've seen the yields in the bond space and the fixed income space really rising, and, you know, investors are really profiting from it. Now, average yield across the instruments, you know, inched that's in the bond space by 11 basis points to 11.3%. Now, across the benchmark, we saw in the short term, we saw about 34 basis points uptick there, and then there was also on the mid section, there was a 4 basis point, and in the long-dated instruments, there was a brunt return of sellers as investors, you know, continue to take profit of the April 2049 paper. Now, we're looking forward, we're saying that there was not much activity in the Treasury bills market last week. We saw OMO bills, same thing, similar trend following their CBN special bills. We saw a double-digit figure, that's 11% yield for CBN special bills. A lot of sell-offs going on there. But also for the Eurobond space, we're seeing a lot of, you know, yields going up, and, you know, but the reports coming out of that space saying that it was trading at the worst years, you know, ever, in the first half of that has ever been recorded. But we have Babajide Solanke, fixed income dealer, FSDH Merchant Bank, to give us more insight as to what's going on in the Eurobond space. Good morning, Babajide. Are you there, Babajide? So we're seeing that the 10-year, as in what was recorded, the 10-year Eurobond closed the first half of the year at 13.45%. We're waiting for Babaji to come back if you guys are going to give us more insight. But how did we get there? You know, investors are beginning to think that the Eurobonds are now unsafe for investors, as yields at double-digit rates are often considered junks, you know, suggesting that they are either unsafe or to buy or unattractive to bond buyers due to several factors. Now, do we think the government is going to consider buying more Eurobonds Eurobond, saying that the borrowing is getting harder. This is especially with the Russian-Ukraine war and, rising energy costs, rising prices. And this is, the report also indicates that about $50 billion have been pulled out of emerging market bonds as borrowing gets harder and at a reasonable cost at that. Emerging markets like Nigeria have seen bond prices fall following the Russian-Ukraine war and a decision by the U.S. Fed to raise rates to combat rising inflation. Also, expectations for the week now that there will be moderation. If we move to the equity space, we see that with moderation in prices, investors are going to be looking at bellwether stocks because ahead of in the earnings season, they're going to be taking advantage to make re-entry ahead of the the earnings season. Now, the possibility of continued profit-taking activities is not ruled out of this. As a result of that, we're going to probably be seeing more choppy patterns at the NGX, and we'll see how today closes to see the beginning of the first trading day of the week after the holidays. Now, investors are going to be advised to probably take positions in fundamentally justified stocks so that they can make more returns out of this volatile, season that we are in. We really don't know how the market is going to go, and we don't know how it's going to pan out at the end of the day. But we're going to flip back to Babajide and get his insights on the Eurobond, space and know what's going on there. Hi, Babajide, are you there now? Babajide, can you hear me? So we lost Babajide there due to technical issues, but we're just going to say that markets, investors are saying, analysts are saying they're going to be cautious trading. Investors are probably going to be saying, what am I picking at? What am I not going to be letting go of? And with the rising, inflation and the MPC and CPI figures expected next week, we're going to see how that's going to go, Laddie. Yeah,
we'll keep tracking all of that. A lot to unpack there, with this markets, and the headwinds are still there, so we'll see how investors react to risky assets at this point. All right, Will, thank you so much for the update. We'll take a quick break now. When we come back, we head to London. That's the moment to stay with us. All right, let's head on to London now. We have some data coming out there in the UK. We have Juliana to unpack all of that for us. Great to have you, Juliana. So the UK economy grew 0.5% in May. Quite a surprise, despite the cost of living crisis over there.
Yeah, absolutely right. According to data released this morning by the Office for National Statistics, the British economy grew pretty solidly in the month of May by 0.5%. This has completely defied market expectations. I think analysts had expected that the economy would remain flat after a 0.2% drop in April, and there was growth in all three key sectors. So this is services, manufacturing and construction. I think particularly in services, the main push has come from health, actually, and this is despite the vaccination program winding down, as well as the test and trace being completely scrapped. But there were more visits to the GP. So, of course, if you are a GP and working in a private sector, this is going to bounce back and reflect on the economy, which it has. Also, as well, lots of activity around tourism. They've done particularly well, and we've seen that because that's reflected in the airports. You can barely get on a plane because it is just so busy at the moment. But there are some concerns, and the thing is, of course, as we know with ONS data, we're always looking in the rearview mirror. We have had pretty damning forecasts from the International Monetary Fund, from the Office for Budget Responsibility, all saying that it does appear as if the UK economy will shrink this year and will be flat next year. But we'll just have to wait and see. I think, 0.5% is growth, and it's seen as a good thing, and definitely something that was reflected in the markets this morning.
Right, yeah, and talking about the markets, I see it seems the pound actually reacted positively to that growth rate.
Yeah, that's right. So the last time I checked, sterling was trading up 0.3% against the dollar, doing much better against the euro. But I think investors are really looking at the big story here in the UK at the moment, which is, of course, the race to become the new tenant of number 10 Downing Street. It has been dwindled down from 11, late 12, with Priti Patel to 8. And yes, Kemi Badenoch, the British Nigerian, is still in the running, beating Sajid Javid, the former Health Secretary, former Chancellor of the Exchequer. So she certainly certainly gets a round of applause for that. Everybody's talking about the one thing that matters, which is taxes. Conservative Party definitely plan to lower taxes. How are they going to do that? Hustings are taking place today, and I think really, if you look at the domestic market, that is going to be weighed in on who emerges as the front runner.
Well, and I'm sure Nigerians will be rooting for her over there. All right, thank you so much, Juliana. We'll get more updates
Not
from you
all,
at
not
1:30.
all.
Not all. Some.
Thank you.
All right. Okay, now let's take a look at the markets. We see, it's still extreme fear in the crypto space at 15 points. It's gone deeper. We were at 18 points just a few days ago, but now it's deeper into extreme fear at 15 over 100. Market cap, $871.92 billion. That's down about 1.79%. Volume traded, $55.73 billion, up about 4.64%. We're seeing Bitcoin dominance there still ranging within that 40% range. And Bitcoin now, price Bitcoin at 8 a.m. this morning was at $19,484. That was down 0.06%. We're seeing it trading up about 19,008 at this hour. Price of Ethereum, $1,055. That's up about 0.02%. A marginal gain there. 24-hour volume traded in Ethereum, see $13.04 billion. The price of Bitcoin started a fresh decline below that 21,000 support zone. Bears gained strength and pushed the price down lower. So we seeing that battle there between the bulls and the bears in the market. All right, let's bring in Olumide Additional now, financial market analyst. Hello, Olumide, great to have you. Hello, Olumide.
Yeah, hello.
Yeah, Olumide, great to have you. Well, it's still about Three Arrows Capital. We see there reports that the founders of the bankrupt crypto hedge fund have gone missing, even as investors are still trying to recoup assets. What's going on there? Hello, Olumide, can you hear me? Okay, seems we can't, Olumide can't hear us there. But let's look at the top alts by market cap this morning. We see it's mostly red on that counter. We see BNB there trading at $223. It's marginally down about 0.01%. Cardano at 42 cents, up about 0.42%. That's the only green we're seeing on that counter. We see eCash there still less than a cent. It's down 0.62%. And XRP is still holding to that 30 cents range. Might break if we see more volatility in this market. That's down about 0.06%. Moving on to the top 5 gainers, we see CVX there, $5.58, up 5.17%, and let's see Serum there, $1.01, up 4.62%. It was quite a lean top gainers list we're seeing, with Huobi token there for the centralized exchange at $4.40. That's also up by 1.02%. And we see Aave. Aave was on the top losers counter, I think, yesterday, but now we're seeing claw back some gains at $69.96 per coin. It's up 0.94%. And we see GMT there, one of the play-to-earn tokens that's up about 0.93%. Flip over to the top losers counter. We see USTC, supposed to be a stable coin that's down this morning by 8%. Tezos, $1.48, down 7.65%. And Chile's token there, down 7.42%. Chile's, that was trying to, one of the fan tokens there, trying to get up on that gainers counter with most of those play-to-earn tokens, but we see it back down this morning at 7.42%. Loopring, one of the oldies there from 2017 or more at 36 cents. We're seeing that still trading actively in this market. It's down 7.35%. And Matic there, 54 cents. I got to a high about $2 in the previous bull run. It's trading down 6.50%. So we see the market is still quite volatile this morning. All eyes are still on data coming out from the U.S. at this point, as the crypto market still correlated strongly to the NASDAQ. So whatever happens there, we see also happen in the crypto space. We're still seeing traders try to recoup some of the losses that they've made from most of these platforms that are going bust. Talking about USTC, and now we see Three Arrows Capital also having issues with the founders of that platform now on the run, and traders, and at a time where traders are also trying to find ways to recoup most of the losses they've made on those assets. Well, the market is still in limbo this morning. We're still tracking to see how Bitcoin performs into Thursday, Friday. We see sell-off still come Thursday, Friday. We are talking about equities markets and the crypto space. So we'll be looking out to see how the market actually ends the week. All right, that's it for the markets today, and that's a wrap on the program. Don't forget to join us by 1:30 on Business Incorporated for more updates and development in the world of business. Thank you so much for watching. I'm Ladi Williams. Bye for now.